Good morning. This is Jerry Gulke with the overview of this morning's crop report. Significant about this one is it's the first time that the USDA takes a formal look at the 2010-11 crop, the one that we're planning as to yield. And of course, we know the acres as we know it now would be the March 30th acres, and that's what they'll use until June 30th revision. So surprising to some might have been the number they used for the yield, 163.5 compared to last year at this time at about 156 or 58. So they increased the expected yield quite a bit in that they do give credit for the fact that we got off to an early start and for technology and so forth. And putting that number into place, that it still gives them, based on an increase in actual usage. In other words, they see world usage going up about 2%, and our exports going up a little, ethanol going up a little more, 200 million bushels for next year more compared to what they have for this year. Actually 300 million more than they had a couple months ago. So there's either they're thinking EPA is going to raise the amount, or that the use to that somewhere between 10 and 15%, or they're seeing economically that we will use more ethanol as a blend because of the economics, that crude oil will stay relatively firm. This also may give us an indication as to how they view the economy and how that's going to affect our demand for everything, really. So the good news is they raised the yield, and it may not be as high as some think, but again, we got to grow it. And but our carryover still stays below 2 billion. For this year, there was a surprise in trying to update what's left of this marketing year, is that they raised ethanol a bit more, and they raised that they had the lower feed usage, and they actually increased the exports by 50 million, which probably is going to reflect what China has said they're going to purchase. So there's a lot built in here for that, and of course, we talked about the fact last week that China says they're going to buy 3.5 million tons for next year. And so that may be the extra 50 million that we're going after in their outlook. They do give credit more pointedly so than in the past that feed usage in corn won't be increases as much as it would otherwise normally if feeding comes back into the livestock, in that we're using a lot more DDG. So if you're going to burn 300 million more bushels of corn for ethanol, then that creates the DDGs that you're going to feed, and of course export. The export market is pretty good for the DDGs, especially to China. So I think what they're saying to us is that they're going to buy some corn, China is, and they're going to buy DDGs, and the world is hopefully back on track to increase the usage of corn. From the world outlook standpoint, this is where there's a divergence, I guess, and although they see the usage going up, the corn stocks are also going to go up as well, and that's kind of an interesting point, is that we're going to see increases from a lot of different countries in production in corn next year to compete with us as well. Same is true for soybeans. They see a record production, of course, because of South America, and an increase in stocks worldwide. For the soybean situation today, they left everything pretty much unchanged for the carryout. They changed some numbers around. They increased the crush in oil for oil and meal, and are looking a little more friendly towards meal being a good export, and they see oil stocks going up. So exports, physical exports out of this country went up 10 million, and the bottom line was they lowered the residual, which means, we talked about this before, in that the residual is unexplained disappearance. And so they lower the residual, and then they put it where they find it, in other words, in exports and in meal in crush and so forth. So the carryout stayed at 190 million bushels. It's not something that the market was looking for. I think the speculator and the traders kind of wanted to see that lowered some, but so maybe the old crop bullishness is over, and now it's up to South America to ship it. And our exports normally fall off a cliff about starting in late May and in June and July, because South America takes over. At least that's what's happened in times past. The carryover for next year is at 365 million. They use, again, the acres of 78.1, and they use a yield of 42.9 versus 44 bushels last year. So they're saying, in one hand, that we're going to get a lot better corn yield, but on the other hand, they see the bean crop a bushel less. But if we get the same yield we got last year, and there's some out there thinking our yield is going to be even better than last year based on a number of factors, but if we raise it a bushel an acre, you know, that's at 77 million acres harvested, that's another 77 million bushels, and pretty soon you're over 400. The other standpoint is we've been known not to grow good bean crops and good corn crops the same year. Some years we've grown less beans than average, and if you drop that 2 bushels an acre only, you're down 180 million bushels, and now you're all of a sudden down to back to where you were last year. So a lot's hinging on the yield, of course, which we all know, and we'll have to see how it looks. The El Nino, La Nino thing will be watched very closely because some are thinking the El Nino is slowly coming to an end. If that happens, it does not would portend for ideal growing conditions in July and August like we had last year. So a lot, of course, debating on the weather and on China coming in here and buying corn. In the corn market, I think you know, the market is still concerned about China. They think they're going to come in here and buy. I have contacted a lot of people that watch that on the floor and so forth, and they said, you know, that something better happen again. You know, a bull needs to